The Cleveland apartment market is telling a really fascinating story right now, and it's not some big drama about a crash or a boom. It's actually something way more subtle, and honestly, a lot more important. It's the story of a great rebalancing. So we're going to break down exactly what that means for you, whether you're a renter, a landlord, or just someone trying to keep up. I mean, seriously, if you're out there looking for a place, does it feel different? Maybe it's not the same frantic game of musical chairs it was just a couple of years back. You're probably seeing more for rent signs popping up, or maybe, just maybe, your landlord seems a little more eager to get you to renew your lease. Let me tell you, you're not imagining it. That feeling is the very first sign of a pretty major shift in the market. What's happened is we've basically gone from a total landlord's market to a renter's market, and it happened a lot faster than most people thought it would. Just a little while ago, it felt like finding a decent apartment was a real battle, and you just had to accept that rent was going to go up. But today, well, the pendulum has definitely swung. Renters just have more choices, and that crazy intense pressure to sign a lease right away, it's really started to ease up. The whole power dynamic has shifted. So to really get a handle on where we are right now, we've got to rewind the clock just a little bit and understand where we just came from. For a long time, the story in Cleveland was super simple. You had way more people looking for apartments than there were actual units available to rent. And that, my friends, is a classic supply and demand situation, right? When demand is that high and supply is that low, landlords pretty much hold all the cards. Buildings were full, vacancy rates were super low, and rents, well, they were on a one-way trip, and that trip was up. But here's the thing about markets like that. They don't last forever. In fact, that exact period of high demand and soaring rents, it actually planted the seeds for its own undoing. And this brings us right to the heart of our story today, what I'm calling the Great Rebalancing. And this is where it gets really interesting. When all those developers and investors saw just how tight the market was, how fast rents were climbing, they heard a signal loud and clear. Cleveland needs more apartments. And boy, did they respond. The very plans for the buildings that are just opening their doors today were actually drawn up way back when the market was at its absolute peak. This is a classic real estate phenomenon called the supply lag effect, and it's so important to understand. Think of it as a four-step process. First, the market sends that signal. Strong demand, rising rents. Second, developers react and start planning. But, and this is the absolute key part, in step 3, it takes years to get permits, get financing, and actually build a big apartment complex. So by the time you get to step 4, all those different projects that were started at different times, they all tend to finish in this big, concentrated wave long after that original signal was even sent. And that wave of new supply, that is the climax of our story. It is the exact moment the entire dynamic of the Cleveland rental market flipped. Okay, I want you to picture a chart in your head. For years, you'd see this nice, steady line moving up representing all the new renters looking for a place, and just below it, you'd see another line for new apartments opening, always kind of lagging a little behind. But then, all of a sudden, that supply line doesn't just catch up. It shoots straight up, crossing way, way above the demand line, and that big widening gap between those two lines. That gap is the story of today's market. It visually shows you the moment supply finally started to overwhelm the rate of new demand. Now, there's a technical term for this. It's called market absorption. But don't worry, it's way simpler than it sounds. It's just a way of measuring how quickly all those new and vacant apartments are actually getting rented. For a market to stay balanced, the absorption rate has to keep up with all the new supply coming online. But for the last few years, the number of new apartments opening has just been way, way faster than the market's ability to soak them all up. And when that happens, what's the result? Well, the number of empty apartments, the vacancy rate, it has to go up. It's just simple math. Okay, so we've covered the how and the why the market shifted, but really, the only question that matters is, so what? What does this new reality actually mean for people on the ground? Well, this shift creates a ripple effect that touches literally everyone. For you renters out there, it's pretty much all good news. More options mean more power. Simple as that. You've got more places to look at, which gives you a much better position to negotiate. For property owners, though, it's the exact opposite. The pressure is on. They're now competing with the building next door and with that shiny new one that just opened down the street. And for investors, it's a time to be a lot more cautious. The days of easy automatic rent growth are over, at least for now. Now, there's a really common misunderstanding about all this new construction that I hear all the time. People see these fancy new luxury apartment buildings going up and they think, oh, that only affects the high end of the market. But that's a really narrow way of looking at how housing actually works. It's not the whole story. The reality is an increase in the total number of apartments helps create relief across the entire board. Think about it like a chain reaction. When someone moves from their older Class B apartment into one of those brand new buildings, what happens? They leave behind a vacant unit. That new vacancy frees up an option for another renter, who in turn leaves their apartment empty, and on it goes down the line. It's a filtering effect. It means new supply, even if it's high-end, ultimately eases competition and pressure at all levels of the market. At the end of the day, more supply is more supply. So let's put all these pieces together. What is the new reality for the Cleveland apartment market? What's the real bottom line here? Let me be perfectly clear. This is not a story about a market collapse. Not at all. It's a story about a return to balance. After a period of really unsustainable growth, the market is just shifting into a new phase that is way more stable and frankly more competitive. It's moving from being a one-sided game to one where both landlords and tenants have to be a little smarter and a little more strategic. So if you walk away with just one thing from all this, let it be this. This new market rewards patience, and it punishes outdated assumptions. For renters, that means patience is now your best friend. The right apartment at the right price is out there, and it's much more attainable if you're just willing to look. And for owners and investors, the old assumption that rents will just keep climbing no matter what, well, that's a dangerous assumption to make today. Success in this new environment is all about adapting to a more balanced and a more competitive world.